commentary for Monday, the 10th of November. We've only got like 6 more to go until we're going to be done for the year, and we'll start again next year. Tonight is going to be a questions night. So if you have questions, please type them in. I received 4 emails. So those for the emails, I'm going to get those answered today. And where is Branner? Branner. I don't see Bill yet. So Bill was supposed to be here. When he comes in, I'll make a quick comment to him. Okay, here we go. A couple questions that came in to me. And if you have questions, please type them in. Why did we sell out of Micron? And of course, that comment came with regards to Micron today being, I'm going to go to the market close. Micron finished today at 253. .30. The question is, why did we sell it on Micron? And I thought I went through this last week, so we're just going to review one more time. We are taking a huge profit. When I mean huge, we're talking like, in all reality, a 400% plus return. We are using a stock replacement strategy to still be in the stock. And that stock replacement strategy is a 220, 300 bull call. We used a short call with $9.30 credit, like we got out at a net $219.30, only missing 70 cents with our stock replacement strategy. It is way over, that's not the word I'm looking for. It's way stretched via valuations. I mean, if I was to look at it, so some of you are like, well, Kevin, I don't get it. You did not hire me to gamble in your accounts. My job is not to gamble better than anyone else. My job is to give you facts and figures. And right now, the PE actually has gotten a little bit better. The PE is at 33. The forward PE is at 12.89. But when you're looking at comparables to other stocks that are in this arena, I hope I'm not making a fool out of myself. But when I compared them to other positions and other stocks, well, that's gone up too. But there's a key for you. A little bit higher than Texas Instruments, but look at the forward PE of Texas Instruments. Is it a 26.40? It has some sustainable growth. When we're looking at Micron, its PE is a 12. 12.89. When you work the earnings per share, if you take your forward P of 12.89, I'm going to run a calculator here. In fact, I should just run it in front of you guys because you'll want to see it, right? Calculator. If we were to run our 12.89, I'm going to give it a 13. Let's just give it a 13 and go on the high side. Times 19.65, which doesn't really give you a good idea that it's going to be there. There's how you have your number. We're already where we should be at for next year. Well, Kevin, don't you kind of rigor and jigger in between the two? Yes, but Micron, income, sales, actually let's do it this way. Sales is 37.38 billion. We're okay getting out of Micron. Kevin, you did not get out of NVIDIA. No, we did not. Yes, NVIDIA has a much higher PE and it has a lower PE, but we're now looking at an enterprise value of 4.7 trillion. Their sales are 2.5 times what Micron is, and their forward sales with contracts is in the $1 trillion mark. Fundamentally, we were done with Micron. Now, we did. One of the neat things, one of the most amazing things, and hopefully you all listen to this. I know it's going to come as a shocker. I am not perfect. Part of the whole reason why I started collar trading is because I knew I would make mistakes. I knew that there was no way that I would plan on getting it right every single time. And for lack of a better term, I'm married. When I first started this, again, you could just see the look on my wife's face. Oh my gosh, I've married an idiot. He wants to gamble. It's like, no, honey, I'm admitting I don't know it all. Because I don't know it all, we're collar trading. And as I showed everyone last week, we're taking in a 1.5 to 2 year period of time, we're taking like a 400% return. And part of the taxes you already paid last year. As we added shares with those protective puts, you already paid some of those taxes and profits last year. Half of these profits are going to be long-term capital gain. Half of these 300, 400% profits on Micron, long-term capital gains. You won't pay any more than 15% taxes on some pretty darn good gains. That's the beauty of what we're doing and why we sold out on Micron. Bill, you just got in here, Bill Brandner. I'm going to give you a quick call when we're done with this tonight. Okay, second question. And again, if you have questions, start typing them in. If there's questions about anything, go ahead and throw it my way. Second question from the email that I received. Yes, I want to pay as little in taxes as we possibly can. I'm always looking for long-term capital gains. Now, with that understanding, yes, the long puts are a short-term capital gain that I turn into more shares. That's the whole premise behind collar trading. I do a ton of work. Keith does a ton of work. I definitely know Nate does a ton of work. We study and we study and we study and we study. And yes, I was within 5 cents of the earning per share and within $10 million of the revenue for Meta. And the damn stock still went down. You can do all the research in the world. And if you think your algorithm, if you think your research, if you think your bot investment letter, if you thought your, I don't know, technical analysis, weird Ikimoku waves or Elliott waves, the fact of the matter is, if you thought at any given time you've got an edge on the market, you've got something that no one else has that's going to consistently make you returns, that is the biggest lie you could be telling yourself ever, because it doesn't exist. And as soon as you can admit to yourself, even with the 40 hours a week, I always make sure I'm working 40 hours a week. I'll crunch numbers, I'll read, I'll listen to CNBC, Bloomberg, Fox News. I will spend 40 hours a week working for you because that's what I expect you expect of me. That's because it's my job for my own money. And to make it simple and to make it sweet, all those hours don't matter even when you get it right. So we trade with collar trades where we flip, we have a 2 out of 3 chance of being right. We can make money if it goes down, we can make money if it goes up. We only are hosed if it's sideways. We're doing everything we can to say we don't know it all. And because we don't know it all, we're going to hedge. We're going to hedge to the upside, we're going to hedge to the downside. If you didn't listen to it, last week we went over our stock replacement strategy, leap bull calls. Big credit on the short side, kept ourselves at 300, have still another 175% possible return on invested capital. It's a great position to be in. We're building some cash going into next year, once again, because we don't know. And 1, 2, 3. And the fourth question was, yes. Yes. I always use level 1 fundamental, technical, sentimental analysis before I place any trade. It shocks me how many people put trades on. Kevin, you entered a 630, 700 December 26 Meta bull call. Why? Well, Meta's fundamentally sound. It's not in good favor with the market, but it was simple. It was an easy decision to make. It was using technical analysis. Anyone that we took out the trades that were profitable, break even or slightly profitable, or the ones that we didn't make anything on, all of you that got out of Meta, we put new Meta positions in. Why did you choose a 630, 700? You know what? Let's make the chart a little bit simpler and easier. One, we're at 630 right now. Oops. Sorry. One, we're at 630 right now. It was an easy point to use, knowing we have $30 to the downside. We have past support right here in May. Easy, 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 easy to use. On the upside, Kevin, the 50-day is at $723. The 200-day, which might be hard to break, but we fell through it in a single day, so I don't think there's a lot of support on the 200 level. It's 677. Where did I see our biggest resistance level? Sorry, not that I didn't see a lot of support at 677. I didn't see a lot of resistance because it broke it so quickly. Where do I see the resistance? Well, for 2.5 weeks in October, it held just above 700. In July, 4 weeks, it fought 700 and stayed above it for its next leg up. 3 weeks. In June, it fought 700 and stayed below it till we used up all those sell orders. It was a simple decision. 600, 700. Well, what if it breaks 700? It's a simple decision. 700, 795, 800. And we'll keep following it up. So there are a couple more questions that came in. Excellent questions, by the way. One of them, the answers you're not going to like. Do you protect verticals? No. It already has the protection in the short call side. Now, this comes back to, and a different question for this individual. Should you have taken the gains on Meta for the December 25 and the January 26 verticals? Well, if you ask me today, yes. Before the earnings, the answer was no. And maybe I might have made a mistake I know this is just what you guys love hearing, right? And taking the verticals off because it might be back to trading at 750 by the end of the year. Something simple to understand. And that was a great question, by the way. Simple thing to understand. We make the best educated, is more than educated, thought out, researched decision at the time. And with all of that, we still might be wrong. And that's the part about trading that's unique. Someone else asked, you said you were going to get out of Bank of America, and you haven't done it yet when you said you probably would by the beginning of last week. Another unique thought process that I think everyone needs to just remember: the market is a living, breathing, ever-changing, frustrating, loving beast. And what I say one day can change the next minute, the next hour, the next day, next week, the next month, the next year. The market is always changing. So it's interesting to think that there's one strategy that works all the time. It doesn't. Markets go up, down, or sideways. We've done a lot of just protective putting. We've done a lot of elite calls. We've done a lot of elite bull calls. We haven't done a whole bunch of caller trading here till recently. Kevin, our market lost 20% this year. At that time period, we did a change. At that time period, we're like, you know what? Trump's in the office. We have tariffs. Everyone thinks it's going to be bad. Let's face it, February through April sucked. But you know what was neat? We were no longer with Schwab. We could add 2 to 3 times the amount of puts on the way down. I remember when it was at the worst in April, which I think it was down 21.3% close to close, or highs from highs. We were down that 5 to 7% range. We made up 2/3 to 3/4 of it. We had added shares. The little run up right here, we had added shares. Protected, got another leg down. If you had asked me, and I would still asked the same question. For me, the two things that are inflationary for me are custom cabinetry for a home. And damn it, if every fishing lure, line, hook isn't twice as expensive this year than it was last year. Recently, you maybe have heard Trump talking about if gas goes down, everything goes down. And he's right to a certain degree. He's right. Are there other things that are going to go up and be more expensive? Maybe. Or competition's going to come in because we're in a free market and we're going to get more things here in the United States that are more competitive. I had no idea tariffs or Trump into office, especially after how he did the first term, was going to cause that kind of drop in our market. So we adjust our thought process and we trade. We fix where we're at and we try to do the best we can to make it work. Year-end taxes. We'd use the money blocks year-to-date dividends, the estimate for short-term taxes. Dividends, no. In fact, Jim, let me give you a call tomorrow and walk you through their tax center. The dividends, are always long-term capital gains at a 15%, but they do have a chart estimate for short-term and long-term capital gains. With your permission, I will give you a call tomorrow, or you can text me, Jim, if there's a time tomorrow that might work better for you. I'm going to zip you a quick phone number so that you have that. Please write that down and we'll go over that. Earnings are always a gamble, so you never know. Bingo. But I did know, Mod. I calculated it so close. Question, do you consider adding Baidu back or Baba? Oh, I keep looking at it, and I should have got in at 100, but I didn't have it in me. I would invest in Baidu over Baba because it owns 30% of Baba. I've made more money in my lifetime off of Baidu than any other stock. And I really, really want to get into it. I'm just not seeing the opportunity just yet. I look at it every single day. Baidu is easily my most favorite stock ever. Rode it from $22 up to $7.50, 10-for-1 splits. Every time it gets above 30, I'm like, oh, I need to get in. But then it falls down again. Its PE is only 12. Sales are 18. It just, fundamentally, it's not great. Kathy Wood pushed it up higher before and people jumped on the bandwagon. It's 52-week high is only 150. Negative insider. Next 5 years, negative growth. This year, negative growth or earnings per share. I love the stock. And if I ever got to talk to Trump face to face, I'd let him know I'm pissed off that he killed the stock that I've made more money off of in my lifetime than any other stock. I just don't have a compelling reason to get in yet. My compelling reason before was technical, but fundamentals beat me on technicals. I really, at 82, I just thought, oh, you've got to get in. It's too cheap. But we had people worried that ADRs are going to be booted out by Trump, which was a possibility, not a strong possibility. At this time, I can't find a reason to reinvest in Baidu, and I would choose Baidu over Baba 100 out of 100 times because how much bigger Baidu is and everything that Baidu owns. If you want the best Chinese index, it's Baidu. Baidu is the best Chinese index that you could be in. Now, could Baidu could Baidu be my flyer next year? Yes, maybe. But the short answer is if I can't justify it to myself and I can't justify it to my wife, which really sucks, because a lot of times I trade off of her risk tolerance, then it's not one I'm going to be getting into with everyone else. So if I'm not personally invested in it, have been invested in it, want to be invested in it, can justify it, then really I can't legally and ethically be putting you guys in it as well if I'm not there myself. If you force me to and call me and say put me in it and I try my best to talk you out of it, I'm only an advisor. It's your money. I get to follow what you tell me to do, and I will do it. But I would really struggle right now. All right, here we go. Let me go through and we'll get a little more questions in. Disney's this week, just as a heads up on our list. Baidu is next week, and Target is next week. Walmart is next week. The big picture I found really disappointing. Another rate cut in December would be absurd. And I really like this guy's point of view, but I'm 180 degrees opposite. As you look through what he writes here, he writes it in regards to GDP and the stock market. Perfect, Jim. I'll take care of that then. The stock market and the GDP don't have anything to do with pricing and unemployment. Pricing and unemployment is where you have to is the job of the Fed. So if you look through the eyes of the stock market, Berkshire Hathaway, stock market gains, blah, 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 blah. Yes, Fed Chair Powell should not be should definitely not be cutting rates because of the stock market. He should be cutting rates to ease inflation that kind of really isn't there, but more so to protect the job cuts that are coming and to protect the unemployment rate. I usually agree with this guy, Patrick J. O'Hara. I love what he writes. I could not be farther in the opposite direction because he's citing monetary policy using the stock market, proving that we don't need it, or GDP that we don't need it. And it has to do with inflation and it has to do with employment. And really, no inflation, it's the employment that we should be somewhat concerned about right now. Dow, still bullish. The Dow is still bullish, and we're bouncing off of the 50-day. We're bouncing off of the median line. S&P 500, just like the Dow. I'm calling it still bullish, and someone might say, well, Kevin, technically we're still bearish because the MACD hasn't crossed over again. And you would have me, you would be correct. That is true. But I'm calling a bounce off the 50. I'm calling a bounce off of the median line. And let's face it, Democrats are figuring out that, yeah, they won some governorships, but they've closed our government long enough. Longest closure ever. Wanting $1 trillion, 0.29 over 33 billion to keep the tax cuts for the American Care Act still in place. Looks like we're making some progress, and hopefully that'll be something that we get taken care of by the end of the year. Most likely not. Don't be surprised if for a month or two you pay significantly higher premiums because these SOBs, and I'm saying all congressmen, Republican or Democrats alike, like to take vacations this time of the year. And I don't know if they will stay in session long enough to get the Affordable Care Act credits put in, which means January and February, I'm paying about $2,800. Might get it back in taxes. I should probably pay in that $1,400 to $1,500 range is what I would expect to pay going into next year. When my insurance guy gave me a call, let me know. I'm like, crap. I'm going to pay $2,800 for insurance till I get it figured out. And yes, I'm still calling the NASDAQ bullish as well. Okay. I still think November is going to end up equal signs. I still think we're going to end up November up 2%. If we take a look at our chart, we're actually just about where we started November, if not down a little bit. So we will have some movement higher. Really, the key is, I think we hit 7,000 at the end of the year or sometime in December. Christmas rally, seasonal, cyclical happening. Everyone that I know around my neck of the woods, way behind the S&P 500. Let me check and see where the S&P 500 is right now. S&P 500 year to date. No, that's the Nikkei. still probably right around 15%. Year to date, 16.17%. So do I think we have another 150 points of the S&P 500? Yes, 100%. I think it's there. Watch us finish up 20% for the year. Most of the people I know right now have about an 8 to a 9% gain in their clients' portfolios. It sucks to be in bonds, 40% of your portfolio that's in bonds that has way underperformed the market. Oops, awful. Okay, earnings. I didn't put them in here. Really, I will put them in here before I upload this. CrowdStrike on Monday, Stub on Tuesday, Cisco and Tencent on Wednesday, Disney on Thursday with JD.com and Beazer Homes. That's about it. That's all we have when it comes to earnings. Pretty light. Economic reports, CPI and PPI, if the government opens up, and actually they won't have those numbers. So we're going to have next to nothing for economic reports this week. Boy, that's been in there for a while. How am I looking to trade? Time to let things continue to run. Very interesting article that started this whole downturn. Michael Berry. NVIDIA's overbought. Palantir's overbought. He's got huge short shares. He's going to lose hundreds of millions of dollars. And as Alec Karp said, he's bat shit crazy, because this is significantly different than the one time he got lucky, and earnings and income justify where we're at. We're not in a 2000 to 2003 scenario, the dot-com. We're not in a 2008. Things are significantly different. Here are the most expensive stocks in the S&P 500 alongside Palantir. I got this on November 4th. PE for Palantir is outrageous. Actually makes Micron's PE look a lot better, right? Maybe you should stay in it. AppLovin Corp, CrowdStrike, Texas Pacific Land, Broadcom is in there, is way overpriced. Correct. Intuitive Surgical's in there. Tesla, Palo Alto, Welltower, AMD, Advanced Micro Designs. There's another one, Kevin. AMD's at 44. Micron's only at 33. Again, way overpriced, not worth their earnings. I do like out of this whole list, we're not in any of them except for Palantir. I did pay attention to AMD because that does indicate that the chips are way overpriced. Never would have gotten into Intel. It's very poorly run. Had a bailout from the government. Not impressed with where it's going to go. So, yeah, short answer is I like where we're at. I'm so glad we got out of Palantir at 200. So glad we took our profits on Palantir, that we stayed in almost a year, 130 to 200s, an amazing return. And then we just reset the trade to go farther out in time. Very interesting article. Wall Street is too fixated on the high valuations of tech and speculative stocks. This comes from Kramer, one of the most liberal and not really successful money managers can even say, hey, the gains on the S&P have come from the Mag 7. Mag 11, Mag 17, depending which ones you want to throw in there. Finally, someone saying, hey, you should have a substantial amount of your portfolio in them. Missed it by about 4 years, but it's really neat to see a talking head admit where the profits of the S&P 500 are coming from this year. Okay. Interesting article, Amazon, the upheaval. Again, Amazon, not fundamentally sound for me. Don't like it, won't want to be in it. They were our big drop on the website, Money Block. Recently got, again, hacked or had their shutdowns. They are going to have to give billions upon billions of revenue back to keep their customer base because they can't follow through with their contracted AI Amazon Worldwide Services. Last but not least, someone asked about the Medicaid eligibility income chart. Obviously, everyone gets Medicare, but here's the Medicaid portion of it. Just have it in there so you guys can find your state and see if you're going to qualify for 2026 or not. Any other questions that I may have missed in my Q&A for today? Are there any other questions that I can get answered for you? And yes, maybe a bull call spread on Baidu would be a good idea. I'm just struggling. Struggling. I'm trying to wait a second to see if anyone wants to say anything. And if not, we can call tonight. I appreciate you guys being here as always. In fact, I think I need to recognize a couple more people. Adam, haven't seen you in a while. Well, haven't seen you maybe ever. Welcome. We've got a new Adam's now attending with us. Habuda is how I might say your last name. Vanderveer, good to see you. You've been here a couple times now. Welcome. We have Jonathan Parker here for the first time. Welcome to have you here. Nathan Brubaker's here. Boy, we're getting more popular as we're going through. Obviously, Nathan Roberts is here. Good to see you. Did I not? I might have one more thing to answer the question. I think I already said it though. Bank of America. When are you going to get out? I missed that one. Thank you for asking that. Technically, if you're asking me on a dollar figure, I want to get out of Bank of America at 55. That would be my dollar figure. Was I prepared to get out last week around 51 or so? Yeah. 51.20. Actually, it looks like 3 or 4 weeks ago, that was the number. When we came down and touched 51.82, yes, I thought for sure that's where I should be getting out. On the top side, it touched 54 almost today. 53.99. That comes pretty dang close to 54. The trend line says it can get to 54, maybe 55 by December, but I will most likely be out of Bank of America before December 10th, which is the rate meeting where they might cut rates another quarter point. And banks usually don't react favorably to that. So I might get out. I haven't done my fundamental research for going into next year. I'm really having a hard time if we do some more rate cuts or we get a new Fed chair that's going to definitely cut another 1%, which personally I would like that. If that was to happen, again, I just can't make I can't make the numbers work right now. 14, 12, I could probably keep it still at a 14.5. But going into next year's 437, $63 on the utmost high side. So my high side would be 63 for the year. My low side, 15 times 3.66, 54.90, which is where I want to get out. So I would struggle knowing I would spend $1.20-ish. So I'd spend $5. When we could get out at 55, I'd spend another $5 going into the next year to try to get it up to 63. I just don't see $4 or 8% of growth where I might be looking to put us into a financial. In fact, if I was looking at a new financial to put us into, it would have to be either Key Corp that seems to have the opportunity. I've looked at Zion. We are looking at regionals right now. But again, I can't make Zion work either. It just, the numbers are difficult. So looking to get out, don't have it exactly figured out yet, but I am looking to get out. All right. Yes, Nathan, I'm actually going to go through this. Nathan Brubaker, our first week back in January, I go through expectations for my stocks watch list. And it's interesting because I usually define my PE. It's somewhere between a forward PE, current PE, could be higher or lower based on the industry. And then I use current earnings and next year's earnings. I have a big Excel spreadsheet. If you go to myhurleyinvestment.com, somewhere there in January of this year at the myhurleyinvestment.com, I go through all the numbers that I've come up with for this year. And it's just an Excel spreadsheet where I'm using PE, forward PE, earnings per share, future earnings per share for the next year. And I'm trying to come up with where we think stocks are going to end up. Nathan, if you go to Rich Mormon, he's the one that follows me more often than others. And he's like, dang, if you didn't get that right. Dang, if you didn't have that number correct. And it's just interesting because I trade a handful of stocks that I know where the current PE for the majority of those stocks are at. And I just find it interesting because I think my Apple number was like 270 to 283, and it's right there. It's just where I'm just taking a mixture of PE and forward PE, earnings per share next year, and then I calculate what I would use and what earnings I would use, and it's going to be the first or second or third week in January that I'll do everything on my watch list, and we'll be going over it then. Or again, if you go back to My Hurley Investment, that's singular, myhurleyinvestment.com, I've got everything I did this year. I really don't like Christmas very much because I've got about 800 stocks that I crunch numbers on, which just takes me a lot of time. But Nathan, appreciate it. Thank you. Great question. Any other questions for anyone? If not, we're at that hour mark. I appreciate you being here. Jim, I'll give you a call tomorrow at noon. And Bill, want to give you a quick buzz right when we're done. All right, guys. Hey, Maud, great questions today. Thank you very much for asking those. And again, I hope everyone understands the more questions you ask, if you have it, probably someone else has it, or probably 30 to 40% of the group has that same question. please ask all the questions you can. I run these for you guys, really nothing more than I want to give you guys the ability to understand what your money is doing and why. I kind of giggle. I appreciate a couple of you call and let me know when you're not going to be here. That's totally okay. I just found that through 2008, people appreciate being told what their money manager sees and what they're doing for their portfolio. In which case, I promise you, there's not another broker out there that will talk to you once a week, show returns, show what he's doing. This is what I'm trying to do a little bit different so that my clientele knows what I'm doing and why. And if you disagree with it, you're welcome to give me a call and like, no, Kevin, no Baidu, no China. But anyway, it's my pleasure to be able to do this and give this to you so you know exactly what your money's doing and why. Guys, have a great evening. I appreciate being here. Great big class. My newbies, welcome to have you. We're going to keep running this until I think the 3rd week of December. Then we take 2 or 3 weeks off for the holidays. Then we start up that 2nd week of January and off we go. We run this all the time so you guys know what we're doing and why. Have a wonderful evening. Appreciate it, guys. Talk to you later. Well, I guess we'll see you next week. Bye-bye.